Hello, good morning. This is Shark once again, looking at a few shares that I think can be categorized as defensive stocks. Not many would agree with me. I'm looking at CTC, looking at the price. This is the weekly chart which I have here over the 2-year period with the MACD and RSI to monitor. Have a look at it. The MACD is pointing upwards. A good buy would be in the 900 levels. We are almost on the resistance. RSI seems to be in the right mix in the buy zone around 50 plus. With overall markets going through some of a correction phase with the global situations that look very gloomy, especially in China and India. We could look a few areas. One is the 1000 mark and the other as the 900 mark. So these are the levels that I'm looking at. A position, if one should be careful, is to hold your nerve and wait until the right price comes. My strategy with CTC should be a great opportunity. In the recent past, we are seeing how the price has been maintained at these levels despite the uncertainties in the global equity market. So there is something that this share tries to tell you with overall news, with the local news related to the industry, to the tobacco industry. The price seems to be holding well. So these are some of the traits I think one should look at it. So there is no harm having a CTC in your portfolio. These might repay you during harsh volatilities. That's said about CTC. Looking at Nestle, that's another great share. Of course, I have put the MACD indicator, the window here, and nevertheless a buy in this region is a great. This will be like a 50-50 to get in around 2050. 2000 would be excellent for an opportunity around the 2200 to 2250. So we are looking around these that could give a opportunity to hit back around 2400. That will form again a beautiful cup, and then we can target later on with an extension towards 2800 with the 25 being tested or came closer to that. So Nestle is another counter that one should have in the portfolio. ROEs are great. Dividend yield is somewhat low, but a good share for the long term holding. The other share I want to have a look is the Lanka Lubricant. Yes, I'm holding this particular share. If I remember, I was suggesting a reversal could be possible around 330s, if I remember correct. Correct me if I'm wrong in the thread. But you see here it's hit the low point, and then you see the price 350 hitting back to 385 and back again. We have crossed the mark here, and I like to see this type of price action, the candle patterns in the daily. This is the 1-year horizon. What we have, MACD, look, it looks very positive. So that means the big fishes are not selling. So the selling is not, one can say it's not a genuine sell. It's just maybe some people are selling in small quantities to get in at the right price. So for me, around 330s should be the price for a reversal. Looking at the divergences, it looks great. I have no other information regarding the overall industry, but with the global oil prices are coming down, and there's a talk about inferior lubricants is entering the market, and maybe the local market is getting or making it open for other players to come in. That could be one of the reasons here. But with the long-term view, I think the share should do pretty well. It's about having some positions in some of the fantastic companies and that have managed well for decades, so for years, for that matter. So these are the factors that should one take in when you're planning to invest. Not all the companies that you need to own. You need to have minimum 25 to 30. That should be sufficient. Some should say it's maximum 10. But the whole idea is to cover most of the sectors in your portfolio. So that should be one of the points to keep in mind. I think I have covered the 3 shares which I wanted to cover. Some even consider LB Finance to be one of could be entered as a defensive stock. Let's whatever the reasons, LB Finance have maintained great ROEs, dividend yield somewhat acceptable, and good at the current going. This is the weekly chart. Weekly chart will give you great buy levels. Not that we expect it to reach. This is the weekly chart. Weekly chart gives you a couple of targets like 110, and we don't know. If I draw up something like this to see where the trend could break. Okay, here is something to think about it. Right. So you have the resistance point around 120. Okay, so you need to break 120. Okay, now for a support, where can we find the support? This is very important. Now one may draw the trend this way. Hang on a second, just let me get this straight here. Yep, let me get this. Okay, now the trend has been broken. Okay, now that's very clear. Okay, so I can draw in different ways, but if you go on an unbiased view, the trend was broken with the big candle. I don't know the volume, but this could be some low sell quantities, but as a point it has closed. So this is a symmetrical triangle. Symmetrical triangles, let's say that's a target 110 here you got, and a 136. That means that's about 25 bucks. Okay, so we are looking for a 25 bucks. So that should give us somewhere here or somewhere here. Okay, so you need to have a bit of patience to collect it. 100 should be good enough. 110 also good enough. So what an investor should be looking at is, now that it has broken 116, wait for 110, buy one lot, and if you are willing to get in around 100, get around 100 as well. So that will be 2 lots for you. And finally your final lot, you could buy around 90 should it fall. So I'm not saying it can fall, and the markets, let's say, being really pessimistic, so something, if it happens like that, even in small quantities, buy around 90. This is a bargain stock. So these are the 3 points one should look at it from a technical perspective. Like I said, the weekly would love to see. Look at this. When it hit the lower band, there were great opportunities to buy. So you had bought it around 51. Look where it is, where it was in August late. See here, same, the crossing. So if you have a bit of patience, wait till the 30. So it could reach, when it's like 90, the RSI could reach the 30 band. So there are opportunities. So it's all about awaiting and having patience, and of course to invest with your money, not with borrowed money, not with the borrowed money of the broker, because you'll be paying interest on that, and you will not be in a position to hold with all these factors coming in when you have borrowed money. So psychologically it will be much safer if you invest with your own money, which you do not need at least for the next 2 to 3 years, even for anything. So you don't if you can make up your mind, decide that yes, this money I do not need, I will not use it for the next 5 years. That should be it. So you should invest those money so that you have the holding power. That's a little bit of advice for the newcomers. Hope you go through this video and put your comments. So until that, this is Shark signing off for the Equity Check.